can't believe 2024 is almost over with. In this video, I want to give you 7 tips of things that you will be able to do before the end of the year that will impact your bottom line on your tax return. These tips can make a big difference as to whether you're going to get a refund or you're going to pay Uncle Sam. So let's get started. Tip number 1, contribute to an HSA. If you have a large deductible on your health insurance, you are eligible to start up an HSA. And you can do this on your own or you can do it through your employer. Many of my clients don't even know how to get started. You go to the bank, you have them open an HSA bank account. And this account is going to be used only for medical purposes. That is very important to remember. It's only going to be for medical purposes. Individuals can contribute up to $1,650. Families can contribute up to $3,300. Now, what this is going to do is going to lower your taxable income. So let's assume that you made $20,000. Now you're going to deduct $3,300. Your taxable income will be $16,700. That is going to save you all those taxes. The most important thing to think about is you're going to use this money for medical reasons for one reason or another, especially if it's a family. So why not open an HSA and save a few $100s in taxes or maybe even more? Tip number 2, real estate in the Augusta rule. And this mainly applies to business owners. Basically, what the Augusta rule does is it's going to give business owners the ability to rent their home to their business 14 non-consecutive days in which the owners do not claim the income. This can be very significant. You will have to follow certain guidelines and you will probably have to have the help of a professional to guide you as to how to do this properly and correctly. This is a really nice deduction, especially for business owners. Remember to use it if you can. Number 3, accelerate business expenses. So let's say that in the next few months, you are going to need supplies, materials, you need to travel, buy it before the end of the year. This is going to make a huge difference when it comes to your actual taxable income. You're going to lower your taxable income. Obviously, this is mainly for business owners who can jot down a list of things that they may be able to afford and buy before the end of the year. You can buy this on December 31st and it would still count towards the 2024 taxable year. Number 4, maximize retirement contributions. And I tell this to people all the time. Not a lot of people take advantage of this, and this can make a significant difference in the long run if it's invested properly. However, the limits are as follows. A 401k, you can put up to $22,500 as an individual, and you can have catch-up contributions for those who are 50 and older. You may also do a traditional IRA, which is going to be about $6,500 and $1,000 contribution for individuals who are 50 and older. And for those business owners, remember, besides the 401k, there's the defined benefit plans can make a significant difference on your bottom line. Sometimes, in some of my clients' cases, we can get the taxable income to be at 0. Number 5, review and optimize tax withholding. Review and analyze what is being withheld currently, so at the end of the year, you do not have any surprises. You're not owing any penalties, and/or you're also not giving a free loan to the IRS. Remember to go through your W-4, make the calculations, go through the IRS tax withholding estimator so that next year you are not overpaying or underpaying, unless, of course, you want to give the IRS an interest-free loan. Number 6, harvest tax losses. So I'm going to make an example for this to be easier to understand. Let's say you have an investment that sold at a significant gain. And now you've had this other investment that is not doing so well. And you're fairly confident, actually very confident, it's not going to do well for some time. It's not going to give you what you really want. The bottom line at this point is you've made a lot of income on this investment. Sell this other investment so that way you can offset the income and your taxable gain is going to be lower. At the end of the day, this investment is probably not going to give you anything. So it might as well lower your taxes for this year. So remember, if you have one that has made a lot of money and you have concerns about the other one, analyze and see if this is a good year to match them and make it work for you. Number 7, make charitable contributions. Up to 50% of charitable contributions will be deducted from your adjusted gross income. Make those charitable contributions. They will impact your tax return in a good way, not only adding value to society on whatever it is you're doing the charity for. And remember, it's going to lower your taxable income. There are charity plans that are for businesses, and for those you may want to consult a professional. They can make also a big difference on charitable donations and your bottom line. I do say some of these recommendations that I have made, definitely consult with a tax professional. The HSA is a fairly simple way to handle things, but consult with a tax professional to make sure you're following the guidelines correctly. And if you don't already know me, my name is Sonia Nadvais. I'm a licensed CPA and wealth building strategist with 25 years experience. If you have any questions about how to take advantage of the latest tax saving strategies, don't hesitate to contact us. To get your free complimentary consultation with a member of my team, simply click on the link below and pick the time that works best for you. We would love to help and meet you.